Good morning, good afternoon, and good evening. And it's another week again, and today is Friday, exactly 4 p.m., February 2nd. We are now in the second month of the year 2024. This is Mark Yu.
This is Wawi Santos. Hello, everyone. Please remember to like and subscribe.
All right. So for our latest episode, episode 99, we're almost at our 100th episode, and we've been recording since 2.5 years now, almost 3 years, I believe. Rally
Yeah,
resumes.
I wonder if our 100th episode will be like a really good rally on that day.
Hopefully, it's been a good week. I mean, we're gonna take a look at our sentiments and see where we're at, where the money is flowing. But I mean, scared money doesn't make money, and this week just proves it, I guess. So,
Mhm.
yeah. So just a disclosure, we're not registered financial advisors. We're just your regular investors in the stock market, and I and Wawi just record our thoughts once a week just to see, what our thoughts are and how we approach the market. So on a weekly basis, we take a look at the sentiments. So another week, another rally in the stock market.
Yeah,
Uh,
we kind of like what we do. We enjoy. It's like a super hobby for both of us here to invest.
True. So right now we're just gonna look at the sentiments for this week before we dive into the crazy rally that Facebook or Meta platforms just did. So for the sentiments, wow, okay. Sentiments as of the 31st of January, from 39.3 a week ago, we went up to 49.1. 10%, 10 percentage points additional, while bearishness subsided quite a bit, 26.1 to 24.5. So historically speaking, for the past 4 weeks, actually, a lot of American investors have been bullish, to generalize it, for the fear and greed.
Yeah,
Mhm. For
yeah, really remarkable. Like an incredible week of market rally in the U.S. market.
yes, especially coming out with the earnings, red hot earnings that just happened this week. A lot of reports did come out. Fear and greed index. Where are we? We are actually greed. Wow. I thought we would be at extreme greed at this point, but we actually dropped from 73 points a week ago to 67. But it's still considered greed at this point. The market momentum, look at that, Wowie. I don't think we have seen this quite a distance from the 125-day moving average. We
As
are.
I as I was saying in the group, I wasn't expecting us to be talking about the S&P 500 reaching 5,000 as early as this month.
It's February, and a lot of Wall Street, as if you guys have been following us, we usually follow or discuss what projections are for the experts there in Wall Street. And one of them that we really like is Tom Lee of Fundstrat. And
Mhm.
he's actually projecting 5,200 by the end of this year, right? Well, 5,200 or 5,100?
Last interview, he said 5250, but he said he may be underestimating. So he must be shooting for higher numbers.
Oh my gosh. So somewhere about 5,200 then. But right now we are already closing into 5,000. But I think he kind of mentioned too, like we might have some pullbacks in the coming months before we rally again to new all-time high. But right now, man, this is another all-time high that we're approaching or we have approached. Stock price strength, look at that. A recent recovery from January 26th. So there's a slight uptick here. So
Mhm.
we have been highlighting for the past couple of recordings, past couple of Fridays, that the stock price strength and the breadth. Well, the stock price strength here, which means that if there are new 51-year highs in the NYSE, it has been trending down, which is diverging while the S&P is climbing up. But right now you could see an uptick here. So a little bit of support to the S&P 500 rally. The McClellan volume, which is, identifies the breadth of the market, which also helps support the rally. It's still quite a bit on the downside. I kind of had some support here, but it then ticked down quite a little bit again. So not a whole lot of support from the breadth, which means there are only a few companies that have been rallying really hard to the upside. The put and call options too have increased quite a bit for the past week, meaning that some of the investors are buying put options to protect their overall investments. So put options only, could gain if the market goes down. So it's like a insurance on a downdraft on the market. The volatility, the VIX, it's also above its 50-day moving average. So I'm not sure. Like, have you felt the volatility at all this past week, Wawi?
I didn't see much volatility. I just see trend,
Mm,
just like a Fed pivot weight, which is expected. But looking at your charts, very interesting at looking at that S-shaped slope, except for the VIX,
right,
which tells me either we're gonna go on a little bit more downtrend, but definitely it's looking more bullish in all the charts you have shown, except for the VIX, of course. It doesn't show that S curve.
right. And you can see here that it's been relatively flat for the past 5 days. So not a whole lot of up and down in the market. While meanwhile, the S&P 500, like what we just said, it's up 1.34% for the past 5 days. I'm wondering like how's the dollar doing?
It was 56 to peso yesterday, but I'm just comparing it to the Philippine peso.
Hmm.
Um, Based on a recent home building project that I'm doing there, so I'm having to convert some of my expenses into
Hmm.
pesos.
Yeah, it went
Yeah.
up a little bit just from 103 on this market watch chart, 103.54. It went up to 104 or 103.99, almost 104. So not a whole lot of difference for the dollar.
Hmm.
So for those who aren't aware, usually the market doesn't like the dollar getting stronger. Usually the market goes down if the dollar gets stronger. So a little bit negligible move for the dollar for the past 5 days. The Nasdaq is only up 1% for the past 5 days, given the fact that meta platforms just soared incredibly,
Un- Unbelievably soared today.
20 something percent.
Hmm.
If anything, the volatility for the Nasdaq, it's down, understandably, 2.88% for the past 5 days. So this is what we forgot to add in our past couple episodes. We're gonna slowly incorporate this on our weekly recording. This is the daily news sentiment index provided by economic research. So usually this kind of reflects if the news is positive or negative. This is articles collected from 24 major US newspapers, compiled by the aggregator Factiva. So this kind of helps us gauge how, reporters are seeing the market, if we're going up or down, or, usually this is the sentiment of the well-read, if not the news aggregators out there.
Hmm.
So as of January, we're actually in the positive side of things. So we're kind of bullish. So this reflects we're above zero compared to in the 2023, we only actually pierced through the zero mark once every few times, and we barely stayed there on the upside, on the positive side of things, except for when the rally started in mid-October. And then November, December, we have stayed on the positive side. So right now you can tell news articles are actually positive or supportive of the market. And for the treasury side, of volatility wise, the move index that we followed, it actually went up 8% for the past 5 days. So it's kind of tricky, but it went up by 8%. Just indicates the yield curve side of things. So me and Wawi have been looking at the yield curve, and
Mm-hmm.
as we see it, as it gets closer to uninverting, there's a bigger risk of uncertainty in the market. So looking at the CNBC trade data here for the past month, it actually dipped down since January 15th. So
Mm-hmm.
we are slowly going negative again on the yield curve, which kind of
Well, if we're looking at what's happened this week, it's somewhat of an upslope this
yeah,
week. So it's kind of like this and then that
yeah,
again.
it's still volatile, which the move index quite captures really. It was up
Mhm.
8%. And if you're going to
Mhm.
look at the 30-year fixed mortgage, so it looks like since December, mid-December, we have been trading between 6.6 to 7%.
Mm.
So it hasn't really gone down quite a bit. And now the Federal Reserve, Jerome Powell, chairman, came out saying that March isn't cutting rates in March isn't isn't even part of the base case. So they're planning to hold the rates tighter.
Mhm.
So looking at the projections here, yes, 80%, almost 80% of those experts see that the Federal Reserve will hold rates on the 20th of March this year. And then let's see on the May projections. Almost 60% thinks that the Federal Reserve would hold it on the same level. Or wait, sorry. 30% thinks it will still be on the 525, 550 levels where currently we're at right now. Believe it or not, right, Wawi? Because just a couple of weeks
Mhm.
ago, this is not even an option. This wasn't here when we
No, no, it was
started
not.
May. They were already
So
seeing a lot of cuts by May. So,
yes, yes. So a lot of unknowns, a lot of variables. They're being very safe
mm,
with their move, and they're not committing to any move until they're convinced that we're at the 2%. Now the jobs are showing strong jobs, so
true.
you know it's incredible, but looks like the technology sector is the one that's laying off a lot more people
Yeah. I
because they
mean,
may have overhired during you know the past 2 years. So
true. I
I
also
don't know, we'll see.
No, yeah, that's true. Because I also took a look at the layoffs.fyi data, which focuses on tech layoffs. They are still laying off at this point, but not a whole lot compared to last year in the same period.
Mhm.
Last year, we heard that Google would lay off a lot of people, tens of thousands, but this year they are still laying off, but not a whole lot. So here, January 2023. Nearly 90,000 employees have been laid off that January of last year. This year, January had just passed, only close to 31,000 have been laid off. Last year, 277 companies announced layoffs. This year, 118 companies. So there are still companies that have been laying off, but not a whole lot now compared to a year ago. So
Mhm.
they're slowly adjusting and catering to the now post-COVID era. So now we're gonna take a look at before we go to Wawi's take. In a little bit, we're just gonna take a look at the fund flows. Where's the money going, or where did it go as of this morning? So thankfully, Reuters came out with this report, and it's free for everybody to see. Global equity funds draw inflows amid economic optimism and easing inflation. Wow, a little bit of positive flow looks like, Wawi.
Yeah, yeah. So that's something new, from Reuters.
So according to the LSEG, global stocks received net inflow of 7.43 billion this week compared to outflows seen in the previous 5 weeks. So this is the first time this year that money has come in to the stock market. Commerce Department report last week showed the U.S. economy grew much faster, allaying concerns of an impending recession. As well as the jobs report today, right, Wawi? That's quite a beat. 300 something jobs, 300,000 jobs.
Yeah, and they were just expecting like 170, so that's like double.
Even unemployment rate, 3.7 compared to 3.8, which was the projection. So
Mhm.
economy is booming. I mean, economy is resilient despite a recession calls.
And people are back working. People are back working.
Mhm. So let's see, by region. Asia attracted a lot of money, 3.7 billion, biggest inflow in 3 weeks. And US and Europe, US received 1.8, Europe received 1.1. So a lot of money are flowing into Asia. Would it be China in the second week in a row? Probably.
Likely because China, you see a lot of value in China right now.
Yeah, China is cheap, really cheap
Hmm.
at this point.
Yes.
We're not saying you go all in China, but if you know. Investors put 1.98 billion into tech. Wow. So these guys who put in 1.9, nearly 2 billion in tech might as well have enjoyed the rally in meta platforms this week in Amazon. So
Up 7% today.
Amazon up 7%. Yeah, post earnings release. So investors have put money to tech for the third
Hmm.
consecutive week. Industrials also saw 579 million. Utilities saw 1 billion of outflows. A lot less people are liking utilities for some reason. Even this year. I think utilities have been really bad this year so far.
Yes, yes, it has been. Oh, I guess even last year,
Yeah,
you
last year
know.
too. They kind of
Hmm.
they suck. So for the past week, before we go back to the fund flow, past week the worst sector performing is energy, which is oil, followed by
Hmm.
real estate and communication services. Hmm. Meanwhile, consumer cyclical, consumer defensives, industrials are the best performing sector. So since the start of the year, best performing sector is technology and communication services. The worst performing sectors are utilities, real estate, and basic materials. So let's finish this fund flows before we dive into Huawei stake. Debt funds. Okay, debt funds too, Huawei. 12.5 billion receive into global bond funds. Global
Hmm.
high yield, 4.25 billion, seventh successive week of purchases. Even government and loan funds receive 1.5 billion and 452 million worth of buying. Money market. Wow. Even money market. People are putting money back into money market.
Hmm.
32.89 billion. Their first weekly inflow in 3 weeks. Precious metals like gold, 50 million inflow. Significant drop from half a billion. previously. And energy funds only 77 million, but still worth buying, I mean, net worth of buying.
Mhm.
Emerging market funds, equity funds, 361 million of purchases. First weekly inflow in 3 weeks. Emerging bond funds, excuse me, suffered 711 million worth of net selling. So kind of all over the place, but still positively flowing to tech,
Mhm.
to global bond funds, to Asia equity, and emerging markets a little bit.
And US equity definitely.
hmm And just a report yesterday, manufacturing in US turned upward. This is the increase to 49.1. So we have so it's been 15 straight month that PMI stayed below 50, which indicates contraction. But at least we're up to 49.1. So there have been new orders for manufacturing. So a little bit of recovery there.
Yes, and even the past few reports on like the trade deficit, you can see that the trade deficit has lessened in the past two reports that I got. So we know that we're exporting a lot as well.
Right. All right. So let's go into Wawi Steak. So what are we looking at this week, Wawi?
What we're looking at this week are some information technology companies that I really have not held a couple of them, but I held Airbnb.
Mm-hmm.
You know, Airbnb is one of those stakes that I have. I am thinking that it's closer to spring, and there should be an upsurge in people looking for places to stay while vacationing all over the globe. And guess what? The leader in that is Airbnb. So
Mm-hmm.
that's my number one. And then I have Monday. A MNDY is the ticker. It's
Uh-huh.
another information technology company. And then the Trade Desk, which is another information technology company that does these connective TV advertisements. So we're looking at even companies like Netflix and Prime now doing their own adverts in their streaming media, and we're gonna see more of these advertisements as people cut the cable. And that's like $1 trillion market from what I have read.
Right. So we're gonna dive
So
into Airbnb quickly here. Um, so Airbnb in its summary, it's close to what, $94 billion in terms of its size. Its price to earnings forward is 17 times earnings, which is quite cheap at this point.
mhm.
Um, at the back of my head, I'm always comparing it to Nvidia at third times. If anything can be cheaper than Nvidia with a solid growth, I mean it's good to consider. So I'm looking at its peers: Airbnb, Marriott, Booking. I think Booking is closely
Yes.
to be compared. So Booking is a lot larger, 124 billion. Let's see. Airbnb has been up since the start of the year, 7.65%. Booking is flat, 0.4%. For the past 12 months, though, you could see the big difference. Booking is up 45%. Airbnb is 23.65%. So let's take a look at its valuation quickly. Yeah, it's not bad. 17 times forward earnings. Its median sector is 15.91, which is good. Wonder when is it gonna report their earnings? Okay, they're gonna announce it on February 13th, close to Valentine's Day.
Mm-hmm.
And based on its November report, they actually beat both earnings and revenue. So a little bit of positive performance on Airbnb. So look at the consensus here. They handily beat the earnings per share. The consensus was only $2. They reported $6.
Hmm. They're being prudent in how they handle their cash flow as well.
Yeah. So I wonder if the market reacts happily. Should they beat again their earnings?
It
But
should be another surprise if they beat it again.
mhm. But just a quick side note on Airbnb. Its executives have been busily selling its stock.
Mhm.
January 5th, CEO and other top executives sold stock. Brian Chesky sold 11 million. Director Jordan sold 1.61 million. Chief Tech Officer sold 0.37 or 370,000. That's on the 5th. And on the 19th, they again sold some. Chesky again sold 11 million again. CTO again sold 370,000. So they're trimming their holdings. On January 22nd, who's
Mhm.
this? Strategy officer sold 5.3 million. So a little bit of selling on Airbnb. But yeah,
Well,
fundamentals look okay.
well,
Mhm.
the same people were the ones that held on and turned it around during the COVID pandemic. They really were hit hard and almost closed shop
Yeah,
during COVID. So I think they're just now reaping the returns of their hard work from COVID pandemic.
that's true. They're just trying to get some cash going.
Cash. Hmm.
I'm looking at its balance sheet. It has 10.9 billion in cash, which is really good.
Yes.
While their debt, looking at their debt, total debt 2.3. Company is very fluid at this point. They have a lot of cash. All right. Let's go on to what's the name of the other?
It's called Monday.
Monday.
Hmm. Like the day, Monday. MNDY.
All right. We're down to our last 10 minutes. I guess when we want after Monday, we're just gonna jump into some of the reports that came out, especially for meta platforms. That was widely
Ooh,
crazy. So
it is crazy.
Monday's
Wow.
earnings per share, $214 a share. It's close to its 1 year high at this point. Price to forward earnings, 137 times. So it's a little pricey. $10 billion in market capitalization. Let's see its peers. Monday can be compared to CyberArk and GitLab. Go close to its value, 9.6, 11.2 billion. So for the past year, Monday is up 45%, Cyber is up 60%. Since the start of this year, Monday is the, if not the best performing, side by side, up close to 14% with GitLab. Uh, let's see its valuation. Yeah, valuation we already discussed, 138 times. Let's look at its financials. So Monday, what does it do? Is it like a software service company type of?
Well, compared to GitLab, I think it provides, technology for companies to um, gather data um, from customers. Here, I'll pull out the description, the
Mm,
company profile, while you're talking about um, the valuation.
yeah, it looks like it's been generating revenue at least. It's been growing its revenue since December of 2019 from 66 million back then, well, 78 million. It grew to 677 million recently.
Yeah, and just like GitLab, I think it's a new company, if I'm not mistaken,
The,
fairly new.
yeah, the only thing
Uh,
that's
their
hinting. Go ahead.
their market is US, Europe, and Middle East, Africa, international. they develop software operating system, cloud-based visual work operating system,
Right. Okay.
um, for
Well,
work management
mhm.
and sales.
That kind of reminds me of Salesforce for some reason. But yeah,
Hmm.
Monday is struggling to produce any profits at this point. They've been
Well,
losing
it's
for a while.
it's based in Israel, that's why. But if the tension there, eases, then it should ramp back up. In my opinion, I'm
Mhm.
just looking at the possibilities here.
Right. And it has about 1 billion in cash and less than 100 million in debt. So company is also fluid in cash. So we're gonna
Mhm.
skip the last call. Was it trade desk? We're probably gonna take a look at it in the next episode as we only have 6 minutes remaining.
Yeah, that's fine. That's good. I want to hear what Meta looks like. Anyway.
So Meta Platforms. So today it registered incredible gains. It's third, I believe, third best day ever in terms of stock price performance.
Mhm.
And actually it also announced a in dividend payouts starting this year, 50 cents
Yes.
per share. So Zuckerberg actually is one of the largest shareholder of the company, would actually make 700 million a year from that dividend alone.
Mhm.
And that aside from that, trying to look for some key results here. Here we go. So Meta Platforms rockets 21% as Wall Street reacts to big tech's best earnings of season. So the stock tag $477 a share. How far has it risen since start of the year? That's one thing I want to watch out. Now, wow. So since the start of the year, it's up 37%.
Mhm.
And if we're going to take a look at its earnings, basically its numbers. So for the 3 months that ended in December 31st, its revenue increased by close to $8 billion or 25%, while its profit more than doubled. Actually, it's more than one, two, three, almost quadrupled in profits, 201% from 4.6 billion. It's now up to $14 billion.
Mhm.
Its users also increased 8% to 3.19 billion family daily active people. Wow. So it's not slowing down. Meta plat
Oh, I don't think it will ever slow down, especially now with artificial intelligence
Mm,
um, being incorporated you know, into our um, what do you call this online world and social media. We should see more of growth with Facebook being a global company, you know, with all of these people using its platform. They
true.
have most of the data, they have the most data for people.
Yeah.
And so they're very much in an enviable position, I think.
Mm,
I'm trying to think what other company has that type of hold.
true. I mean, TikTok maybe comes close because people spend time there to watch short clips, but to connect with other people, I think Facebook is the only one. Aside from Instagram,
Yes.
which it also owns. So yeah, if
Yes.
this is a newly published from Bloomberg, it says Meta Platform's 197 billion surge is the biggest in stock market history. So we just made a
Wow.
record today. Stock holds record for the biggest wipeout. Oh, okay. So this is back in 2021 when it crashed to $100 a share. But
Yes.
it also records the single biggest stock market surge in history. So quite an astounding feat. Look at that. Number one. Second was Apple back in November 2022, Amazon back in February 2022, Nvidia in 2023 May. So nothing comes close to Facebook at this point. So it's quite a milestone that we have just seen today. And closing into Facebook, right now it's over $1 trillion. Actually,
Microsoft.
1.2 trillion. Yeah. Microsoft is 3 trillion at this point.
Oh, okay.
Meta Platforms is still at number 7, top 7 at 1.2 trillion. Google at 1.7 trillion. Amazon went up. Amazon overtakes Google or Alphabet at 1.775 trillion.
Mm-hmm.
Let's take a look at its forward earnings before we wrap up things here. Forward earnings is still cheap, I would say, compared to Nvidia. 20 times next year's earnings,
Wow.
despite the rally. So that just means that the company is, just generating a lot of profits at this.
Exactly. And
Uh,
it's got legs, got strong legs.
mhm. Cash has a lot of cash. 65 billion as of December of last year, and its debt is around 18 billion. So they can easily wipe out their debt if they want to. Yeah. So Facebook and Google, the two major companies that have reported this week. Google actually failed to meet expectation, and it's down about 6% for the past 5 days. But probably we're going to take a closer look on that sometime next week. So, all right, we're less than a minute to go, and thank you again, Wawi, for joining us. Thank you guys for
Well,
tuning in.
thank you very much, Mark, for all your research. And if you guys like all this research and discussion on the current trends in the market, please like and subscribe.
Like and subscribe, guys. Again, this is Mark Hughes.